Yes guys, here we are again, Sean and Nat, presenting to you another volume of Technical Tuesdays. Now we are on volume 19, and before we get into all of the good stuff, I would just like to say thank you and express both of our appreciation for all of the positive emails, messages, comments from people we've never met from all corners of the globe. We're very thankful that you guys have found these videos helpful and learned something brand new.
That's right, and the last Technical Tuesdays, I believe, got over 1,400 views in just a short space of time, about 4 or 5 days. And the reason this is so significant is because that me and Sean know that there's such big corporations, industries, brokers, stuff like FX Street, got your daily FXs, and they've been doing YouTube for God knows how many years. And AstroFx, we've only been doing these YouTube videos for about 5 or 6 months.
Yeah.
And you know, we are very glad to say that we have doubled, if not tripled, their view count. So we know that we have a great connection with everyone watching this video, which is more of a reason for us to keep doing these Technical Tuesdays and keep improving them for all of you guys.
Yes, so in regards to last week's technicals and so on, the market has been relatively quiet, which we will catch up on later. However, the market is picking up now and I've got some great setups to go through. First of all, we've had some students in this week and we're going to go through a few pointers.
That's right. We had 2 or 3 students in this just last week, and we're also Skyping with a student just yesterday morning, and they all brought up a very valid point, which was your Technical Tuesdays are great, guys, but why don't you guys, instead of also helping people make money, advise them on how not to lose money?
Yeah.
And what we mean by this is that there's very common mistakes and traps which a lot of traders can fall for. We here firsthand can talk about how we fell for them, and I'm sure many people watching this video can also relate. So what we've actually decided to do is sit down and actually talk about maybe the 3 steps that all traders go through in order to even get involved with the Forex market. So the first one is trying to conquer it themselves. Now this is something that me and Sean both try to do in our own separate journey, and it just consists of finding about the market through a friend, through a family member, even a Google advert, and then you think, okay, I don't need to listen to anyone, I'll just get a laptop, download a demo, and maybe just chuck a few £1,000s at it, which we all know doesn't really work.
Yes guys, so I can relate to this one very well. When I first got into Forex, I was quite excited. I downloaded MetaTrader 4. Okay, so open MetaTrader 4 platform. It was very daunting and rusty to say the least. It looked boring as hell, but I thought, you know what, I've heard there's a little bit of potential in this market, so here goes. Got my notepad out, made some notes, put a folder together, and then learned how to buy, sell, you know, just the basic things. And I just thought the market just went up and down. We just got to ride the wave, you know. Okay, so with that being said, got onto the demo account, and you know, I must have had a lucky streak on the demo and didn't have no strategy. I know that for a fact. And then I thought, you know what, this is easy. I'm going to open this real account now, and I am going to make some money. Open the real account, very exciting. Okay, again, no strategic methodologies whatsoever, just a load of jumble, buy, sell here, just because it looks sellish or buyish, right?
Because it's low or because it's high, you know, everyone makes the same old mistakes.
Yeah, chucking all the indicators on that the broker gives you for free and so on. But yeah, in that case, I had it was a decent sized account as well. My first account was. I made some money on it, got really excited, and then came step 2.
Step 2 is now hitting that brick wall. When hitting that brick wall, I think that's when you wake up and you think, I actually don't know what I'm doing. And what most likely will happen is you're going to get 1 or 2 very big losses that has just wiped out all the previous good luck that you've had.
Yeah.
And it's a very slippery slope down from there, because again, that's when you actually have realized that maybe you've been having a bit of good luck, or you've just been simply guessing. And this is where you're going to pick up a lot of bad habits. A lot of bad habits. Yeah,
lots and lots of bad habits. So again, I made a little bit of money, got really excited, started Googling holidays. Like, oh my God, I've made it, never going to have to work again. So with that being said, again, many people can relate, because we've had so many students come in, especially the international guys, say, oh, you know, I turned my 20k into 40, 50k and I lost the whole thing. Now, that's what happened to me. Why? Is because I made the 2k, then I was like, okay, I want to get to 15, 20k and so on, and then boom, psychological trading came in, emotional trading came in, and then it was just despair. I didn't know where to look.
It's possibly even just setting yourself unrealistic targets.
Yeah.
I think unless you have someone that can actually guide you with, this is how to see the Forex market, and this is the profit, and this is how you withdraw basically.
Yeah.
Without that, you just kind of think to yourself, okay, 5k to 50k, or you're gonna get my 10k to 100k. So that's a big mistake, which leads us on to step number 3. And step number 3 is, after going through this, what a lot of traders call experience, but isn't really, is now realizing or coming to a realization that maybe I do need a little bit of help. But you're not really willing to invest too much because you've just lost so much. So now you're thinking of it maybe of a cheap way just to kind of get rid of your own doubt and maybe invest in a possibly service or
any external outcome basically. So with us, when we did hit that brick wall, I was wanting to get back on my feet. The only thing that kept me going, and if I can remember correctly, was like an indicator system I was using at the time, and all I could really, what was printed in my subconscious mind was, okay, you did make that 2k in like a day, and compare that to, there's no other jobs that are going to give you that. It wasn't even a day, it was about an hour. Okay, and that's the only thought that's going to be in your head. So thereafter you're thinking, I'm going to go back to this indicator system because it did work for a while, completely eradicating the thought and the memory of, I just blew my whole account using that same system. I
think what happens is winning becomes more fun but less frequent.
Yep. Again, it just gets guesswork, and then you start jumping onto other things here and there.
Yeah. So when it comes about investing like yourself, we had a student come just, I think it was 1 or 2 days ago.
2 days ago.
And, a brilliant guy, his name was Nathan. And, he was in a WhatsApp group with, I think, just like I said, about 100 or 200 traders, all just trying to throw their own piece or their own 10 cents into it. And, he's very, very clever though. He got in contact with us. He waited a period of time to see our Instagram or see our YouTube and, actually see about us getting that 90% success rate in our trading. So he came along, and I think what we do to most people is just simply ask them, get to know them, on a personal level. So we asked him, what actually brought you here?
Yeah, so we, every student comes in, we do like to get a person, because we do actually tailor it around everybody's needs. So yeah, as Nat said, he asked him, what actually brought you here, and it was very, very simple. It was actually a quote which I pulled up, okay, and the quote is, "If I wanted to become a tramp, I would seek information and advice from the most successful tramp I could find. If I wanted to become a failure, I would seek advice from people who have never succeeded. However, if I wanted to succeed in all things, I would look around me for those who are succeeding and do as they have done."
Very, very simple and very effective, guys. You need to see and invest in the people that almost you want to become. There's a lot of people out there having Forex services, but as well as investing in what they are selling you, you need to invest in that person. So, look at the situation that they possibly might be in and think, okay, that's something that I'm fighting for. And that's when you invest in the right situation.
Yeah, so with that being said, again, we've been through a lot in this market. We've got so much experience, and that experience only came over, segmented bits of time, only because we were so persistent and actually got through it all. So as Nat just mentioned, all of these externals, we used to struggle. We used to be quite active on Facebook in all of the groups. Again, so many people's viewpoints of the market in your mind. Again, it's just a mess. So when we did feel bad, Nat used to go on Twitter and hashtag EuroUSD and stuff like that, thinking he could find like a Forex guru on there just to follow him.
I'm guilty of that one.
Yeah. We had our fair share of buying into signals, the signals left, right and centre, especially on Facebook, and people in third world countries who, like, by looking at them, they're not really making money. Not all, that doesn't really matter to say. However, as Nat mentioned, it's the actual person and their skill. They'll just post 1 or 2 signals. We we'll go into a little bit of profit and we're like, oh my god, this is the guy. I need his signals forever. And you might have 10 losing signals. However, the same thing in your mind, them 2 signals at the start worked, and again, it's just a mess.
But anyway, I think that signals, you've got your indicators, and you've got robots, and if everything fails, you've got managed accounts.
Yes.
All of these things are very, very big topics, and I know are topics that unfortunately have a lot of victims in the Forex market.
Victims and bodies. We could go on for 20 minutes or so. So we are in fact going to leave them 4 pointers for another video.
That's right.
To go over.
Signals, indicators, robots, and managed accounts. So hopefully maybe in another Technical Tuesday video, maybe the next one, or if not, we might have to just give it its own video.
You got to do it yourself, guys. You got to learn yourself, be a man on an island, eradicate all of the noise from even your friends, for instance, and stay in your own lane. That's the only way that you're going to reach success.
You can invest in education. You know, we know that there are many teachers out there that, you know, you can go to, but again, ask for the verified results, ask for the trading history, and invest in the person and invest in yourself. Now, let's go on to the hot topic. So, hot topics. AstroFx will be taking each and every single week just one topic. Well, we might discuss a few depending on the week's information, and we'll actually be presenting it to you guys. So, this week's hot topic is Greece.
Yes, guys, Greece. But before we get deeper into the turmoil in which Greece is under right now, I'm just going to go back along the timeline for everybody who's new to FX and so on, and new to this video today. So going back along the timeline, the euro on the whole was actually created around 1999, and it was only 2 or so years later when Greece actually took the decision to actually join the eurozone. And then shortly after that period, then was the euro, a physical currency and so forth, actually, you know, came out in circulation. So with that being said, all these countries that came into the eurozone and so on obviously dropped their old currencies, and so did Greece. And Greece's old currency, again for your information, is in fact the drachma.
So now fast forwarding to today, we actually have Greece, which is in huge financial turmoil, and the debt is around about 320 billion. Now the 3 dates we actually need to look at are the 11th, 12th and 16th, where they're trying to reconstruct some sort of plan to actually pay back this debt. And the next day after that, which is the all important expiry date, is the 28th, where we're actually going to be able to figure out whether Greece will have to default, or maybe they could come to some sort of negotiation.
Yes, guys, and with that being said, again, we can relate this same scenario back into 2008. Now, back in 2008, again, Eurozone crisis, we had Greece, you know, again, slipping up and so on, and it was the ECB actually bailed Greece out many times, and I think it was 200 billion euros was a stimulus package that the ECB and the European Union counterparts were actually putting into Greece, again, to keep it afloat. But what happens with all of these stimulus packages overall, it's just like blowing up the bubble time and time again, and eventually that bubble's got to pop. So I think just after that, 1 year later, it actually became evident that after Greece have took the 200 billion, I'm not sure why, for overspending and certain other factors, that Greece again defaulted. I think it was around 300 billion mark and so on, and again it's just been kept sweeping under the mat time and time again. And I think in fact it was actually one of the record debts in modern history, and I think the debt actually surpassed the GDP figures by about 113%, which again is completely backwards.
So now the main question is, what will happen from here? So number one is, if Greece is coming out of now the eurozone, they'll have to find a new currency. So they might be able to go back to the drachma, but it'll be very devalued currency at that. Number two, you're going to get huge industries, companies, corporations all trying to get their millions out of Greece, which again will create huge turmoil both in the eurozone and in the Forex market.
And hyperinflation overall, which is deadly to any country.
You might even be able to see a long recession. We don't know what's going to happen, so we're all going to wait until the 28th to actually see what decision comes forth, and we'll update you guys then.
Yeah, so with that all being said, guys, you know, that's completely for your information. You can go into it and research it. We just like to give you the outlines and the guidelines of what's actually happening in case you do hear it on the fundamental areas and so on. However, we want to get deep into the charts. Our main focus for Technical Tuesdays today, because it's all about the euro, is in fact the euro pound. Okay, we have the euro USD obviously, and the euro yen. So we're going to get deep into that, and we're going to match up the technicals and see, try and envision a future as to what can happen when the 28th comes about and these decisions come to the surface.
That's right, we'll update you when that happens, but for right now, let's get into the charts.
Now guys, we're going to go straight into technicals. Now remember, this is where you come to get your weekly trading needs on our hot pairs, which we actually trade ourselves time and time again. So we're going to start with gold. Now gold is a favorite of many out there. Now we always get questions about gold, so that's why we're going to include it on each and every individual volume of Technical Tuesdays. Now first of all, as you can see here guys, for those who haven't got a chart in front of you, we do have the gold 4-hour chart. Now we are currently trading today at 12.07. I think we made a low around 12.04, 12.05, which was in fact our first target hit from last week. Now as we mentioned earlier on, the market hasn't been too, it's been a bit quiet on some of the pairs we did go over. I'm going to touch base on the euro pairs in a moment. However, gold has in fact followed our breakout. So I know many people have had many tweets, many direct messages and so on for people who have used our technical analysis from last week's video in order to make a decent amount of pips. And when I say decent, we have fallen around 300 pips from our recommendation. Now let me just pull up the before shot as we do always. Current market price, we actually short gold around 12.34, 12.35, with our target one being 12.05, and that was achieved today. A break of 12.05 will in fact lead to 11.80, which is our second downside target, which is around 450 to 500 pips. So let's just get back onto the live chart now. Okay, so zooming down into the 2-hour chart, as you can see right here, gold was in fact toast today. It broke the flag formation. Very easy trade. Okay, we highlighted the last swing lower high on the 2-hour and the 4-hour chart. That's where stop losses could have been placed. Again, with stops, that's completely up to you guys. Never take everything we say as gospel. It's just to use in alignment with your current market knowledge for you to make a profit overall. Now, as you can see, gold is just floating in thin air right now. Our next support boundary is around 11.85, 11.90, which is in fact, if I can just show you on the daily chart, our daily trend line, which we could be potentially the gold is basically being magnetized to this trend line right now for 0.3. And as you can see, today's candle is in fact a huge bearish engulfing candle, engulfing 1, 2, 3, 4 days. So again, that's an indication that the momentum is being dragged right down on gold. So gold right now, the price of gold is falling very easy and simple. Monthly, as you can see, this monthly candle now, I think I pointed out last week that this could potentially close as a bearish engulfing formation. I would love it to come and close around the 1170, 1180 mark, and then for the whole month of March we would in fact 80-90% of a bearish bias towards 1000, 1050 zone. Okay, so we'll cross that bridge when we come to it anyway. However, we need to focus on what's now and what's next. Gold downside, no buys on gold yet, no reversal whatsoever. 1190s, 1180s downside target, so that's another 200, over 200 pips on that, guys. So remember where you heard it, right here at AstroFx, calling the gold breakouts, calling the gold trends, trades, all for you guys. We don't ask for nothing for this, we're here giving our insights to you. So any criticism, constructive feedback is always welcome. We love to hear from you guys from all over the world, so keep pipping. So with gold being said, we know the breakdown on gold now. We're going to go straight into the euro pairs now. I'm going to start with euro USD. Last week we did in fact highlight this trading setup. Now I've already got the lines drawn on, the ranges drawn on and so forth. Just keep it clean and simple. Again, for those guys who haven't in fact got a chart in front of them right now, I'm just missing one thing, which is target 2 if target 1 is broken. Now okay, excuse my faint chart, I've in fact got some huge range drawn on and it's made my charts go a little bit purple. However, it doesn't impact the quality of the analysis that's going to be delivered to you right now. So target trend line 1 was broken, and we came back and we're hugging the trend line as resistance. We found support here, here and here at the moment. Immediate resistance for Euro USD is right here around 1.15. Okay, so we're going to split it up into a buy and sell scenario. Completely, you guys, it's completely up to how you want to take this. 1.15 immediate resistance. If that's broken, we have got potential to trade all the way up to 1.1870, which is 370 pips to the upside. Upon a break of this outer counter trend line right now, because the trend is still down, we're still swinging, as you can see here, here, here. Okay, A break of this trend line would in fact lead to the 1.11 region, okay, but however on the daily chart we're expected to come and make a new lower low, which will in fact break this level, okay, if we have price action in mind. So two scenarios: break of 1.15, head into 1.18, okay, then we have to be careful around here because the overall trend is still short. However, euro pairs do have slight room for retracement. So again, next week we'll catch up on it, see if we can throw some Fibonacci on there and so on. So yeah, break of this 1.11, a break of 1.11. Again, overall we're looking at 101s, 1.07s, 1.08s. So euro USD, two directional bias trading setups for you at home. Now let me just zoom. Actually, no, I'm just going to go straight onto Euro Yen. Let me just go straight onto Euro Yen. As you know, guys, this one's been a tricky one. Okay, overall, we are looking quite bearish. Let me just pull up the weekly chart. Weekly chart on Euro Yen. All right, we've got this key level. There's one key level that I'm just awaiting. Okay, so overall on the monthly, again, a week or so left, just under 2 weeks of the month. We can't really determine about in regards to what's going to happen. However, we are sat on that cloud right here, which is historical level of support also. Weekly, zooming down, this whole range here is a key level. We've broken it, we've found a support, we've broken it again, and we've been fiddling around it. Last week's candle close on Friday, as you can see, this green candle here, has closed around 45% of its initial up move, meaning that at one point it was rejected and it was pulled back down. So on a smaller time frame, we've gone up, hit back down, and so forth. However, this week's candle is looking, the candle right now, which we can see here, is in fact a bullish hammer, but we always have to wait till the candle closes to make our next trade in judgment. Daily, however, we broke below the base of the hanging man. We closed below the counter trend line. However, today's daily candle, huge bullish engulfing. If we can close anywhere around 136.50s, we could have potentially engulfed 3 days of price action, which gives us the indication momentum is back in play to the upside. So no, I've been saying up down 50-50s. A lot of false breakout play on Euro Yen at the moment. However, we need to just wait for that daily trading judgment based off these candlesticks and where it's going to close, above or below the 135 handle. At the moment, if we do close strong like this, potentially to the upside. Same with Euro USD, we could in fact come all the way up to 137s and 138s on Euro Yen. So looking at the 4-hour chart, as you can see, breakout to the downside. We didn't really have any retest and continuation. We were back above this trend line here, so we've dipped below support and back above support. However, we do have to close above. Now we've zoomed into the 4-hour chart, 136.55s, before we can say, okay, let's buy. Because even though we are in a downtrend, we can still consolidate and make equal highs. You know what I'm saying? Equal highs before we actually come back down and make the overall lower low. So this is a key level. A break of 136.50, we can go long. A break back below this counter trend line, and we can go short. Short targets looking at 131s and then 127s overall. So with that being said, let's just jump straight into the Euro Pound as well. Euro Pound is in fact new to the trading watch list here at AstroFx. We didn't go over the Euro Pound once last year. Didn't go over the Euro Pound once last year, but now we've added it to our watch list. So I'm just going to break it down for everybody who's new to the Euro Pound, as we are. So monthly time frames, as you can see, it's just been toast all the way down, toast. Overall, we've had the swings: lower swing, lower swing, lower swing, lower swing, bearish engulfing, shooting star, bearish engulfing here, and then we've came down. You can see the lower lows as well: lower low, lower high, lower low, lower high, lower low. And yeah, if you can zoom out, we did initially break this level. Okay, that was a key level just there at 0.7750s. Broke that key level, and now we actually been magnetized to the 0.71 handle, which is in fact historical key monthly support. Remember, guys, those major key levels are the big key levels on the monthly, weekly, and daily. And yeah, so with that being said, that's our downside target overall. So let's just go into the weekly to get a refined viewpoint. Weekly candle so far is a bullish engulfing. From last week we didn't have much price action in last week's range. However, if this can close above this candle here, it is a bullish engulfing. However, we do still have days of the week left. We have this shooting star off the moving average. Okay, so we were rejected by the moving average, and now we've closed below. However, we're yet to see some continuation. So if we come down to the daily chart, as you guys know, who are all fond and who are proficient in reading candlesticks, especially all of our students, you can see we have the morning star formation lining up here, which is 1, 2 and 3. We just need a strong close in a few hours to determine if this is a morning star or not. If it is a morning star, there's a high probability that a euro pound could in fact increase and come all the way to 0.75s and 0.7550s. So again, we could in fact, as long as we stay below this range here around 0.7570 to 0.7590s, then that is in fact the last lower swing high. So again, we could maybe even try to fling on a Fibonacci. Let me try this. Fling on a Fibonacci retracement here, and as you can see, we have these levels here. 1, 2 and 3, so 0.75 could be a strong key reversal zone for euro pound if it did in fact break to the upside. However, on the downside, we already know our downside targets, 0.72 and 0.7. We would in fact need a strong close below this range here. The base of the range is 0.7370. If so, we will be in fact going down. So guys, I hope you got all that in time. If not, stop the video, go back, make some notes. We will be catching up on these euro pairs next week. However, the medium-term sentiment is going to be probably decided by the market in technicals after the 28th, when the euro and Greece news becomes a little bit clearer. So I hope that helps. Keep rocking on gold. There are your 2 directional buyer setups on them 3 euro pairs, and happy pipping, and we will see you next week. Thank you very much.